Breaking news, a major shift in the silver market. Stop what you're doing right now because something extraordinary just happened in the silver market and it's far from normal. This isn't just another price swing or a typical volatile day in precious metals. What we've witnessed is the kind of event that occurs once every 50 years. If you don't fully grasp what's happening at this moment, you could miss one of the biggest wealth transfer opportunities of your life. Or worse, you could find yourself on the wrong side of it. Silver surged nearly 8% in a single trading session. That's not a typo. It's real. For years, silver has disappointed investors with slow movements, sudden drops, and sideways action. But today, it's surged higher with such intensity that even seasoned traders were left speechless. Now, silver is trading around $93 to $94 an ounce. The dream of triple-digit silver, a figure that seemed like a fantasy only a few months ago, is now within reach. But what makes this moment truly different is not just the price, it's the market's underlying structure, signaling that something fundamental has broken beneath the surface. And once you understand what that is, you'll see why major banks are revising their price targets, why billionaires are talking about $300 silver, and why the coming weeks could be a game changer for your financial future. Before diving into the details, let me ask you to do one thing. If you've been following this channel and getting value from our analysis, take a second to hit that subscribe button. We're building a community of informed investors who truly understand what's happening in precious metals, not the narrative pushed by the mainstream media. By subscribing, you help us continue to deliver insightful content. Also, drop a comment and let us know where you're watching from. Are you in the US, Canada, the UK, India, Australia, or elsewhere? I'd love to know. This community is global, and knowing where you're tuning in from helps me tailor the content to what matters most to you. Now let's break down the three key drivers behind this massive silver surge. This isn't just one catalyst driving the market. It's a combination of three major forces, a triple engine explosion that gold cannot match. Engine number one, geopolitical tensions. You're already familiar with the headlines. The US and Israel's joint military operations against Iran, with operations like Epic Fury and Roaring Lion. These sound like something out of a movie, but they're very real. There are reports of strikes in Tehran, the death of Iran's supreme leader, and ongoing attacks across multiple countries. The Strait of Hormuz is under threat of potential blockade. But here's what the media isn't telling you. Silver's response to this geopolitical crisis has been far more aggressive than gold's. While gold rose by about 2%, silver surged a stunning 8%. That's a 4.1 outperformance. And this tells us something crucial about how the market sees silver right now. It's acting as a high beta safe haven. In simple terms, when fear rises, silver amplifies that fear more than gold does. It moves faster, harder, and attracts capital from investors who aren't just looking for safety, but explosive growth in an increasingly volatile world. Think about it. Investors are leaving stocks and the dollar, rotating into precious metals for protection. And within that precious metal space, they're choosing silver over gold because they see more upside potential. Quick question for the comments. When you see silver outperforming gold by 4-1 during a crisis, what does that tell you about market sentiment? Does it make you more bullish on silver, or do you think it's getting ahead of itself? Share your thoughts in the comments. Your interpretation matters. Engine number two, the liquidity trap in the COMEX market. Now, let's get into something even more interesting, market structure. There's a critical liquidity trap developing in the COMEX silver futures market. Let me break this down in simple terms, because understanding this could be the most important thing you learn today. COMEX is where silver futures are traded paper contracts representing silver that are exchanged millions of times each day. Most of the time, these contracts are settled in cash, meaning the physical silver never actually changes hands. It's a paper game. But here's the catch. Paper markets only work as long as no one demands the physical silver. When too many people say, "I don't want cash settlement, I want my silver," the entire system starts to unravel. Here's what's happening now. A massive sell order of 159 million ounces recently triggered a halt in trading on the CME. And here's the problem. The total registered silver available for delivery is under 60 million ounces. That means this sell order was more than 2.5 times the available supply. This is the classic paper versus physical disconnect. The paper market creates an illusion of unlimited silver, But when the time comes for delivery, reality hits. And with it, the notice day for silver futures, when traders can choose to take delivery instead of cash settlement. The physical silver market is tighter than it's been in over 50 years. That's what analysts mean when they talk about the silver squeeze of 2026 entering a parabolic phase. It's not just about investment demand, it's about a growing structural mismatch between paper promises and the reality of physical supply. Quick question. How many of you understand the difference between paper silver and physical silver? Do you know if your silver investment is backed by actual metal or just a promise to deliver it? Drop your thoughts in the comments. Engine number 3, banks and billionaires revising silver price targets. Finally, let's talk about the surprising developments happening in the world of major banks. Some of the largest banks are rapidly revising their silver price targets, and the numbers being discussed would have seemed impossible just a year ago. For example, Deutsche Bank recently highlighted that the current gold to silver ratio of 57 presents significant upside risk to their $100 per ounce forecast. The gold to silver ratio measures how many ounces of silver it takes to buy 1 ounce of gold. Historically, this ratio has averaged between 40 and 60. Right now, with gold priced at over $5,000 and silver at around $94, the ratio is about 57, which means silver is still undervalued relative to gold. Here's the big takeaway. If silver starts to catch up with gold's rise, it could easily hit $150 or even $200 per ounce. Billionaire investor Eric Spratt has even mentioned the possibility of $300 silver if the physical supply continues to drain. Quick question, would $300 silver blow your mind? That's more than 3 times its current price. It's the kind of move that could create generational wealth for those who are positioned correctly. Share your thoughts in the comments. A reality check. Let's be clear, I'm not predicting that silver will definitely hit $300. Nobody knows for sure. But when influential people and institutions are talking about these price levels, it's worth paying attention. And keep in mind, the road to these higher prices won't be smooth. There will be volatility and pullbacks. That's just the nature of the market. Silver's technical outlook. Looking at silver's technical chart, we're seeing a textbook breakout from an ascending channel. Silver has reclaimed 91.33 as support, and as long as it holds above that level, the upward trend remains intact. The next major resistance is at $95. Once that's cleared, the path to $100 and beyond becomes much clearer. But here's a warning. The Relative Strength Index, RSI, is approaching 70, which means the market could be overbought. Volatility is likely, and traders should expect sudden price movements designed to shake out weaker hands. Be cautious when the market opens on Monday. Preparing for Monday's open. Whether you're setting alerts, placing limit orders, or planning to watch the markets live, it's important to have a strategy for what could be one of the most volatile weeks for silver in recent history. Final thoughts on silver's supply and demand deficit. There's a critical factor that many overlook, the global silver supply deficit. Every year, demand for silver exceeds supply by millions of ounces, and that gap is only growing. Eventually, the market will run out of silver at current prices, and when that happens, prices will reset to new, much higher levels. So, when thinking about silver as an investment, keep this supply-demand imbalance in mind. If the physical supply runs out, we could see prices skyrocket. Should you buy silver now? I can't tell you what to do with your money, but I can give you a framework. If you believe in the long-term thesis, that silver is scarce and the paper market is disconnected from physical reality, then even buying at these prices could seem cheap compared to where prices may go. But if you're buying out of fear of missing out without understanding the reasoning behind it, then you might be chasing the highs, and that's a risky move. As always, think strategically, manage your risk, and don't let emotions drive your decisions. And most importantly, have a plan. What's your silver price target for 2026? Where do you think silver will be by the end of 2026? Drop your price targets in the comments. And if you've made money in this silver move, share your story with the community. Let's learn from each other and grow together. The silver market has sent a powerful signal. The question is, are you paying attention and ready to act? If this video makes you to have a rethink about silver, subscribe to our channel for more upcoming update, comment, like and share to others. Stay focused, stay prepared, and I'll see you in the next update. Be wise.